Welcome back, everybody, to the daily show where I'll be breaking down the stock market. So, before we get started, please hit that like button, and that is greatly appreciated. And if you're new here, definitely consider subscribing. Now, if you really want to support the channel and get daily trade ideas, swing trade ideas, live trading, and all kinds of long term and short term setups, definitely check out that link down in the description for Patreon. And now let's get right into the market. All right, so welcome back to the show, guys. And you can see the Fed minutes shows that officials were in a tight split over December rate cut, and it was 50-50 pretty much. And you can see right here also that home prices are getting slightly more affordable, but payments are still holding buyers back because they're really high because of the interest rate that actually, is still high. Just, coming down a little bit, but not quite where a lot of people want it, like three, 2.5, 3%, maybe even 3.5. SoftBank has fully funded OpenAI, and you can see their investment on OpenAI, and we all know that is just a donation. I don't think they're gonna get anything back out of OpenAI, even if they go public. Now the market, well, if you look at my screen, what market did today, Dow was down slightly 0.20%. So we're not getting the center rally. Nasdaq is down 0.24%, S&P down 0.14%, Russell going down. I mean, this is quite a lot, especially when it comes to like just after Christmas. It's down 0.74%. It was down yesterday, and I think it was down last week on Friday as well. Stock market map, what do we got here? Especially on the 11 sectors, we got energy on top, leading communication services, basic materials, real estate, utilities. Week to date, also today is the second day. Thursday market will be closed for New Year, but you can see energy led the way on top, and this is actually the stock market. This was the 11th sector. Microsoft flat, Nvidia flat, Broadcom flat, Google flat, Meta up just over 1%, Tesla down 1.18%. Amazon flat, and Apple also going flat. You can see across the board pretty much flat to slightly red for the day going into New Year. Now, a couple of things I want to show you guys here. And you can see, I mean, retail US money market funds reach record 2.25 trillion. I mean, look at this. When was the last time you saw that? Back in global financial crisis, COVID pandemic, and look at now. I mean, this is just enormous, huge. And when you see these type of things, happening, you would just ask yourself, like, what the heck is going on? Look at right here also, U.S. option market, guys. I mean, look at this. This is huge. Look at where it's at right now. One of the highest reading ever, ever. And when you see the market sitting at all-time high, what do you think? You think market is gonna go and just continue that move higher because there's so much money injected in the economy and in the like especially financial bank sectors? I don't think that's the case. I think something broke, and that's why you're seeing, usually when retails are buying, and it's kind of like this. You can see time and time, even back here, what happened. What happened here? You can see this is 2002, market crashed. This is 2008, crashed. This is pandemic. We definitely went through, a decent correction. And look at now. I mean, this is just disturbing to see that this amount of buying and funds are just reaching record levels, trillions of dollars. That's why when I make these videos and the market hitting all-time highs, I get one or two comments here and there like, "Oh, 2026 market is gonna boom even more." Well, yes, it can go up, but not without a correction. How the market came up from April up until now, it's up massively. So if market, gets a correction, it's probably not going to be a crash, but it can definitely happen from all-time highs. Now that people are extremely bullish about the market, it can definitely happen. But we can definitely, I think, going to a correction phase, and that's going to wipe off some of these gains on S&P and even on Nasdaq. So talking about Nasdaq, I think we need to talk about it. Let's get right into it. On triple Q, it's down 0.23%, so we're just not going anywhere. And you can see intraday what happened here. We pretty much closed near the lows of the day. And what the heck is happening here? Well, you can see, you can call this a bear flag or even a box, whatever you want to name it. But if you look at from especially this angle where we had that gap down, we could not even go up and close the gap. Even today got a rejection. Look at what's happening here, guys. We're actually coming down and looks like it's getting ready to close this gap at 617. And we could do that easily, but why it's not happening? Well, it's the big holiday. We had Christmas, and then right after that, now we got New Year. So, Happy New Year in advance to all of you guys out there. And I hope and I wish you guys have a great time into the new year. And even after, continue that, especially if you're trading, make more money, especially from stock market. And that's why I think a correction can take place, early 2026, and market just getting ready for that. Here on Nasdaq, you can see it's breaking down. So the next stop, if this thing breaks below 619, which is bottom of this channel here, and still holding up right there, then we could see a move up to that 617. But from there, look at the daily time frame. We break below 617, we could go much, much lower into that 613 zone, the next big level to watch. To the upside, we gapped down the other day, so we got two gaps on top. 623 gap, but you can see time and time. Look at that today, candle today. It's definitely not a bullish looking candle. Yesterday we had a doji. Now we got a spinning top or inverted hammer, whatever you want to call it. It's still there. A huge rejection off of this 5-day moving average, 622. We could not even close the gap, and this is actually a daily downtrend. You can see this was the all-time high. This was the recent high. Then we had that drawdown, and now we are coming back up into that trend line. We already got a rejection, and now it's time to see if we can actually hold up here, or there is going to be a decent pullback down to the gap, and possibly we'll head down even more. But at some point, if you see triple Q coming back up, retesting and closing the gap at 623, and we get that breakout over that, we could be going up to 626, possibly after this gap 630. On SPY ETF, it's also flat for the day, but if you look at my screen, it's just not a good looking candle. Same thing like Nasdaq, we did not close the gap, and there is a massive put wall here and also a call wall. We do have well target added back. That 700 call wall is added back over the weekend, and now it's there. So what do we have, especially what whales are targeting? Well, the whale target lower range is 670. The mid target is 687, 686-ish, which is holding so far. And the upper target now that is added recently, that is at 700 here on SPY. So yes, we got a wider range now. If market comes back, maybe down here, that could be a dip. If the market pushes higher near 700, that could be possibly a short. So going into tomorrow's session and into Friday, because Thursday market will be closed, watch out if this thing breaks below 685.88 here. We could be getting a flush down to 684, and I'm just rounding things up at 683.85 down to even 682, and there's that gap right here at almost 681. So this one also you can see clearly on this hourly time frame, bear flagging. We could come back and possibly close the gap, but so far it's just holding up here because of those put and even the call wall on top. Now, if the rally possibly starts going into tomorrow, we get some sort of a move back up to the upside. Definitely that 688 to 689 definitely has to break. Only if that breaks, you're going to see 692, and from there, there is a possibility of a brand new all-time high, which could be 696 and even higher up to that 700 range. But on the other hand, look at IWM here. It's down 0.74%, no center rally, nothing happening here. We did close this gap and now it's just fading. It's not even trying to hold here at 248, 248.65. We broke on that level. And now it's heading down to, looks like, might be the 50-day moving average, which is right down here. You can see right on my screen, 246, and then a lower band here at 245, which could be a critical level to watch and going into tomorrow's session. If we get some sort of a move back up to the upside, now we need to break this resistance here, 245.65, 248.65. Over that, you're going to see a pump up to the 20-day 251.12 and then 252.32. We need to break all these levels, and if it's bullish, I would like to see it above actually 252. That's gonna look more bullish, and we might see that move towards that all-time high again. Otherwise, if this one already giving up, guess what? And it did already. I mean, last 3 days there were down days on IWM, and if this thing continues, and a lot of the banks, we talked about it in my video also yesterday, that banks are blowing up, guys, sitting on massive losses. And if that continues, this thing cannot just push higher. And when the market realizes that something broke, they're injecting all that money into the banking. Why? Why? They're injecting all that money. There is a reason. They know what the heck is going on. There is crisis out there, and that's why you're seeing it. And if you look at KRE, the banking ETF, it was also pushing to the downside. I think yesterday and even today. So watch out. Things are not looking good going into the new year. And here's another example you can see. Yesterday was holding, Dow is down 0.21%. Yesterday was actually holding this previous all-time high as a support 484.44. And today we cracked underneath that. We came down to 482, almost getting down to the 20-day, which is sitting at 482. But we came down to 482.82 and just holding on to it for now. So if this thing, pushes down, and I was talking about it even in my video over the weekend, that this could be some sort of a bear flag, maybe even a double top here. So far, that is playing out, but we don't have any confirmation. That would be taking out this low down here, 479, and so far we're pretty far away from that. Now, I think if this thing comes down and we get some sort of a big move to the downside, come next week, because with this kind of volume, market is not gonna move. This 2 weeks, I mean, the worst time to especially be in the market. If you're trading, day trading, or even looking for any kind of long or short, it's a horrible time, because look at the volume. It's absolutely garbage. The movement, I mean, look at triple Q. Yesterday was trading at 619. Today we finished at 619. Yes, we got a move here and there, like $1, $1.50, but basically we're trading in that same freaking spot since yesterday, since last week. It's really pathetic. So I think when the volume shows up, which is going to be next week after New Year vacation, it's going to be over. It's going to be all people coming back, big boys coming back and trading and putting money into this market, whether it's short or even long. We will see that next week. And right now, things are looking a little bit frothy, so things are coming down. And who knows, that could continue next week. So watch out here on Dow. If we get over 484.44, we could go back up, possibly up to this high, 487, 488, maybe even brand new all-time high. But if this thing breaks down and it comes down here at 482 here on Dow, and if it gets under that 482 level, the next one is a 480. And don't forget, we still have this gap open here for quite some time now, and we could be pulling in to close this gap here on Dow very soon if this thing comes down and takes out this low from just a couple days ago, where we had that pullback here on Dow. So VIX was up 0.92%. It was up yesterday, but not really promising. But only thing I can say, we got out of this wedge, and today we got a doji type of candle and just resting, and maybe I would even say consolidating here. So if you look at my screen, we're just consolidating. We had that gap up and go over this downtrend, and now it's just resting. So if this thing gets up and starts going and gets over 15 bucks, that's gonna put pressure on the S&P, and we would see VIX heading up to that 16 to 18 bucks, and that's going to give us that correction in the short term that we're looking for, and that could come very soon. Now, if this thing comes back, looks like today was holding the 5-day moving average pretty much all day. So that 14 bucks is going to be the key zone for VIX to hold on. But if this thing cracks under that, we could be making a new low, which could be all the way down to the lower band around $13. Now, what the dollar doing, and that is suspicious here a little bit, because if you look at my screen, this is actually the trend line on this monthly time frame, and you can see we're sitting right on that trend line, and dollar just getting that bounce today. So dollar was green, where S&P was actually pretty much flat. We didn't really go down. So if the dollar starts to rise come next year, and we see some sort of a spike back up to 100 or even past that, we could see a drawdown in the S&P. And that is the scary part about a dollar sitting on that multi-year trend line right here, guys. From back in 2011, then we had that 2021 bottom right here, and again we're pulling back into that trend line, which is a really a bad news, especially for S&P 500, because if dollar rises, guess what? S&P will come down. Now, we need to look at oil also, and that's why I'm just going to bring it up a little bit here because you're seeing a rise on dollar. Also, oil is rising, and you can see oil was up yesterday and today up again. It was actually up significantly up to 70.33. So if we get over this 50-day moving average on oil, we could see a move up to 71.31 to close the gap on top. And don't forget, we got a massive gap here. If oil rising, which it did today, dollar rising, VIX is green, and the market stayed flat. That means somebody is lying, and I think we're gonna find out going into January. We just have to wait and see, how things play out. Now, also we need to talk about silver because I know a lot of you guys probably waiting to hear what I have to say about silver. I mean, look at that candle, guys. That's all I have to say. So we had a gap. You can see we had a gap down. We went back up to close the gap. We did, and from there, instantly selling started. And yes, it's up on the day 4.5%, but pretty much came back after closing the gap. We got a doji type of candle, so we found some buyers, found mostly sellers on top, and now sitting with a gap below a 66.49. So watch out, that could actually act as a support if we come back down here on SLB. But definitely, I mean, this thing is still extremely overbought. We saw a lot of the volume actually on silver, and that's another reason you're seeing less volume on a lot of the things in the market because this thing is dragging all the volume. I mean, look at that volume here, guys. Huge, huge volume. GDX was another one that was up actually today, and I'm just looking at GDX instead of GLD, and you can see this thing is up, but it was up even more. We could not even go up and close the gap. So gold actually looks more weaker than silver, and I think the downside can continue going into next year if we don't get any sort of a big rally going into tomorrow and going into the new year. And I mean like Friday also. If this things like silver and gold remain down, we could see further downside here on both of these products. And that's all I have for you guys. Thank you so much for watching, and I'll definitely keep you updated.